Carol Massar.
Yes.
Stocks up for a third straight day. Stocks at session highs. Why are you so pessimistic?
I'm not pessimistic. I constantly ask what fundamentally has changed, because I know we're watching everything out of Washington, but I mean, you still have a lot of CEOs coming in on earnings saying uncertainty. So I don't know. It's an interesting move. 3 days higher on the S&P.
I was surprised to find that we are only 10.7% off of all-time highs on the S&P 500. Remember, it was just a couple of weeks ago that we hit that bear market. We didn't intraday. We didn't close there. But now we're down barely 11%.
Yeah, but that's where numbers really mask a lot of the bigger issues. Is it doesn't feel anywhere close to our being near record highs, right? There have been a couple of people we've talked to, I don't know if you guys have heard similar, that are comparing the economic damage we're experiencing right now to what we saw during the pandemic, just that there's no virus this time. And I find that an interesting comparison, or at least an interesting frame of reference.
Yeah, absolutely. Yeah. But this gets to this idea, though, and I just kind of want to refocus on earnings for a second, because we're now going to get the real mega caps coming into play with Alphabet tonight, and then next week we get Microsoft, Meta, and a few others. And it gets to this idea as to how are they weathering the storm so far, and what are they expecting to do over the next couple of quarters?
Yeah, the one thing I want to mention in terms of the S&P 500, Eric Weiner of our Bloomberg News team said up 6% in the past 3 days, best 3-day stretch since 2020, if you back out that big rally after Liberation Day and all that mess.
Well, the S&P closing out the day higher by about 2%, and that is certainly impressive to be sure. A key technical level to keep an eye on is that 5,500 level. We closed right below it, 5,484 and change. The NASDAQ composite higher by about 460 points, or 2.7%. The Dow Jones Industrial Average adding about 1.2%, and the Russell 2000, a really decent day here, up 38 points, or 2%.
All right, and the S&P 500, no surprise, pretty broad-based here. You have about 405 names to the upside, Scarlet, 97 to the downside.
All right, a very broad advance, too. We're looking at tech, communication services, and consumer discretionary, leading the gains. The weak link here is consumer staples. It has been the best performer since April 2nd, in that it's little change, with at least 1% declines for all the other sectors.
Yeah, and it's kind of fascinating to see some of these earnings that are coming out in the companies. Like Alphabet, it's up about 2.5% in today's session. Alphabet's up more than 4% ahead of earnings. So interesting to see the enthusiasm by investors kind of ahead of some actual
What did you
numbers.
say about Alphabet, up 14% in the last 3 days?
S&P up 6%. Oh, no, Intel
Alphabet.
up 14%.
Oh, it's Intel. Thank you.
All right, guys, Intel earnings are crossing the wire right now. Let's get right to it. The company in the most recent quarter saying that adjusted EPS did come in at about 13 cents a share. I'm not quite sure if that's a beat or a miss. We'll have to come back to that in a second. On the revenue side, the company did beat there, $12.67 billion. The street was looking for $12.3 billion. The guidance for the second quarter, the current quarter, here's your revenue range, $11.2 to $12.4 billion, so a wide range. But the top end of that range is below the average of street estimates. The street looking for $12.9 billion. So on the top end of that range, that would be a miss. The company also saying that for the second quarter, it expects no EPS on an adjusted basis, basically a flat line. The street was looking for profitability of about 7.2 cents here. There's a lot to go through this release, but we should point out that the new CEO has only been on the job for a few weeks, and we get into that situation as to whether or not this becomes a sort of one of those kitchen sink things as he tries to map out a plan for the future. Intel share is moving lower right now, down by a 2%. And I'm looking right now, and I see Alphabet crossing the wire.
Yeah, let's go to that right now. Alphabet's first quarter EPS beating analyst estimates, $2.81. That is 80 cents higher than what analysts had anticipated if we're comparing like with like. Revenue, $90.23 billion, better than the expected $89.1. When you back out the traffic acquisition costs that they pay to partner websites and partner companies, $76.5 billion. Analysts were looking for $75.4 billion. Google Cloud revenue. This is the big one because it's, of course, a driver here for revenue overall. $12.25 billion, $12.26 billion. Analysts were looking for $12.32 billion. So that is a miss on the Google Cloud revenue. In addition, Alphabet announcing a 5% increase in its dividend. And Alphabet as a big tech company having a dividend is already kind of mind-blowing. But the fact that it's increasing its dividend, that just shows you how the state of the world has changed a lot. The stock right now moving higher in after-hours trade by about 5.5%.
Of course, AI being called out by Sundar Pichai, the CEO of Alphabet, calling out Gemini 2.5, specifically calling it the most intelligent AI model, our most intelligent AI model, breakthroughs in performance and an extraordinary foundation for future innovation. Search saw continued strong growth, boosted by the engagement we're seeing with features like AI overviews, which now has 1.5 billion users per month. driven by YouTube and Google One. They surpassed 270 million paid subscriptions. Cloud grew rapidly with significant demand for our solutions. So perhaps not a pullback in build as some were concerned about?
I don't know. Let's talk about that and just continue to watch, because you got Alphabet up about almost 6% here. Just real quickly, I want to mention T-Mobile also out with their results. The company raising its 2025 financial guidance. Also, a red sticky from us here at Bloomberg. T-Mobile postpaid phone net adds, 495,000. That's a miss in terms of what the street was expecting. Street was looking for a higher number at 506,557. In terms of the outlook, fiscal year core adjusted EBITDA of 33.2 billion to 33.7. That compares with the street estimate of 33.47 billion. Again, T-Mobile remained just down just a hair in the aftermarket.
Yeah, kind of interesting to see those results out of T-Mobile, specifically on the back of a pretty solid beat that we had out of AT&T a few hours ago. I do want to go back to Alphabet, of course, the biggest company in the S&P 500 to report earnings so far. And they really did come across much higher than expectations, more so on the guidance, less so in the current quarter. And I just want to break down specific things. When we talk about the ad revenue of this business, which is still, to a certain extent, the big driver here, you're still talking about near double-digit percentage growth. I think it was 8.5% to be specific. And then, of course, on that services revenue side, you're at growth of about 9.8%. So for a company of this size to be posting up those types of numbers is pretty good. YouTube up about 10% as well. One thing, though, that an analyst talked to me about this morning that he said that we should really pay attention to is the company's Waymo and the sort of rollout of the autonomous driving and how that could actually be a net benefit to the bottom line relatively soon, in his words, at least. So it'll be interesting to see if that comes up on the conference call.
That would still be in the other bets category.
Yes.
Right?
Yeah, they don't break it out, so we don't know.
Other bets operating loss was $1.23 billion. That was up 20% year over year. The estimated loss was $1.12 billion. Still relatively small when we're talking about Alphabet, but I think that's an area where a lot of people are optimistic. But make no mistake, this is a company that makes its money still on search and advertising.
Let me just jump in really quickly because we also have Skechers, the shoe company, reporting results. First quarter adjusted EPS, $1.17, beating the consensus estimate by 1 penny. Net sales, $2.41 billion, coming in lighter than had been anticipated. Full bottom line EPS, when you include a gap, it's $1.34. That is higher than anticipated.
Yeah, I want to go back to Google as we continue to see this up in the aftermarket. I mean, we talked, the company also saying first quarter Google Cloud revenue, $12.26 billion versus an estimate of $12.32 billion. What Armandeep Singh said is that it is all about search. That is still the business, and that's what you want to see in terms of strength.
But I just want to go back. I mean, you guys kept interrupting me. I was supposed to rebut Tim. By the way, Tim, that fly is still in the men's dressing room. If you can deal with that, by the way. It's driving me. There's a gigantic fly in the men's dressing room.
All right, do you have something to say?
I do, actually. So we talk about the valuation. So I just want to get to this point on Waymo, though, because this was Brian Nowak over at Morgan Stanley who was talking about this, and he did publish a note, so this is public. He talked about this idea of how the Waymo unit as a standalone could be valued at something like, $45 billion minimum, and that's based on the last funding round. So in his idea, it would be a lot more than that. But compare that to what we learned out of the trial, where they're saying that the Chrome standalone browser would be valued at $50 billion. So at least if you believe what Brian Nowak has to say, you're talking about a Waymo unit that is still relatively nascent, that in theory, at least on paper, is just as valuable as the Chrome unit.
I just have to say something else. We mentioned the 5% increase in dividend. It's now 21 cents a share. Also, an additional buyback program authorization of $70 billion. Maybe that's why the stock is moving higher. I know that we reported this beat on revenue and everything, but at the end of the day, investors are looking for stocks that can deliver, that can return cash to shareholders, and this is exactly what Alphabet is doing. If nothing else, it's got a ton of cash sitting there, and it can use it in this way.
Can Romaine and I talk more about Waymo? Because
how about the fly in the dressing room?
Now,
Romaine, have you been in a Waymo?
I have not, because I'm chicken.
It's incredible. I've done it twice in San Francisco. Look, they're growing, they're expanding, they're in other parts of the country. I think one concern people have is they don't know how much these Waymo vehicles actually cost to build. The Jaguars, the technology is, we think, really expensive. Max Chafkin has talked to us a lot about that, we don't know what the numbers are there and if they're adding up to something that is, look, obviously other bets lost money, but if it is something that can be scaled at a relatively, I mean, we're talking margins for a tech company, right? This is really expensive hardware. This is not like the Chrome browser.
That's why it's going to be stuck in other bets for a long time.
Yeah, it really has.
All I'm going to say is, as you said, Romaine, this is one of the largest market cap companies out there. When we talk about the Magnificent Seven, like this is one of the companies, if it was disappointing, this would be a bit of a bummer, right, in this market environment. For it to come out with these numbers, for it to do the buyback and all these, like to feel like it can do these things, it's pretty impressive.
And we've been here before, right? I mean, we've been here where a lot of investors have sort of discounted, if you will, some of these mega cap companies, saying that, they've kind of gone too far, too fast. And usually we get a course correction. I mean, course correction back to the upside, where these companies let it be known that they could pretty much just throw off cash pretty much as they please, at least when it comes to Alphabet, to maybe to a certain extent Microsoft, and maybe to a smaller extent Apple.
But their numbers weren't bad.
No, they weren't. And I really think that the way Sundar Pichai puts it in the commentary that he gives really showcases how the focus has moved away from AI towards the fundamental strength of its core businesses, whether it's search, whether it's YouTube, whether it's the cloud business. AI gets a mention, but beyond that, it's really about, hey, we're executing on all fronts.
All right, stocks up about 5% here in the aftermarket. So investors, at least so far, liking what they got from the company. And just a quick check on Intel as we go out here, guys. We're seeing that stock also moving around in the aftermarket. It is down almost 6%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Scarlet and Romaine continuing out there on television, and Tim and I are going to continue right here on Bloomberg Business Week Daily. We'll see you again.
The fly, Tim. Get it.
I'll get it. Don't worry. I got you.
You got to get the last word, don't you? All right, we'll see you tomorrow,
I do.
guys. I know.
You couldn't resist.